Greetings everyone and welcome to our simplified stock investment course. So this is the second lesson where we are going to do the valuation of a small business. Stock, as I mentioned earlier, stock investment refers to purchasing or buying a company, and the best way to understand how to buy a company is to try and create a company. So in this lesson, we are going to try and create our own small business and try to value it. So here is our business. Tony wishes to start a supermarket. He needs 10,000 to buy land and construct a building. His savings amount to 8,000. So he has a deficit of 2,000. So he takes a loan of 2,000. He buys the land and constructs the building. Once the construction is done, he stocks up the supermarket, employs people, and starts selling. At the end of the year, the amount of revenue generated amounts to 11,500. Total costs amount to 11,000. So in total, the cost is 11,000, yet he has made sales that amount to 11,500. So the profit equals to 500. Then he pays a tax of 100 and is left with 400. So that's our business model. I don't know if you remember, I earlier mentioned something about assets, liabilities, and equity. So if we go back, Tony needs 10,000, but he has 8,000 capital to start the business. So the 8,000, once he invests into the business, it becomes the equity. That's it comes from his pocket into the business. So the 8,000 is the equity. Then he takes a loan of 2,000. So the 2,000 is a liability. Then in total he has assets that amount to 10,000. The land and the building amount to 10,000. So the assets amount to 10,000. Then we look at the next statement. The revenue generated, total sales sold 11,500. Then you look at the costs are 11,000, so the profit is 500, and he pays a tax of 100, so he's left with a net income of 400. So this will be recorded in an income statement. The revenue, the cost, and the profit will be recorded in an income statement. Then we are done with that. Then we come to a question. If Tony offered you a chance to buy the business at 12,000, will you accept? Again, going back to the business, when you decide to buy the business for 12,000, what do you get? So you are investing 12,000, then in turn you are getting land and a building that is worth 8,000. Remember, the 2,000 is yet to be paid for, so we don't put that into consideration. So you get land and a building worth 8,000. Then in addition to that, you get a business that will give you 500 shillings every year, or $500 every year for the rest of your life if you can manage it well. So is this a business that you are willing to buy for 12,000? So that's what stock investment is all about. You look at the property, or rather the equity that the business owns, then you look at how much profit it's generating, then you look at the price and you compare and you try to find out if the price is worth paying for. You don't just pay, you don't just buy a company because it's called Facebook. You have to look at the profit, you have to look at the assets. Then next we go back. Now we try to divide the business into shares. Let's go back a bit. So the business, we said Tony wants to sell it for 12,000. So what he decides to do is divide it into 1,000 stocks. So 12,000 divided by 1,000, you get $12. So if you buy one share in the business, it gives you buy it for $12. Then what do you get when you buy one share? Remember, the equity is 8,000. Let me move forward so that you can see. So you get the building and the land are worth 10,000, but 2,000 is a loan. So we remove that and we are left with 8,000. So you divide that by 1,000 and you get 8. So when you buy one share in the company, you get a building and land worth $8. Then profit, net profit, when you remove tax, you get 400. So 400 divided by 1,000, you get 0.4. So every share you purchase in the business will give you a profit of 0.4 every year. Then going back up, you get that the book value, as I described earlier, is equity per share. Simply put, when you purchase a share, for example, if the business owns land and a building, if you purchase a share for $12 and the land and the building attached to that share is worth $8, then your book value is $8. Then the 0.4 we have found is the earning per share. Earning per share. So I think we have done that. So I think we are done with this lesson. Thank you for watching. Subscribe and turn on the notification button to receive our next lesson, where we're going to talk about value investment, which is one of the strategies that is involved in stock investment.